Hello, everyone, and welcome to this podcast series organized by the Institute of Chartered Accountants of India in the GCC Summit held at Gandhinagar, GIFT City, Gujarat. And we have with us Pankaj Shah, one of the youngest Central Council member who is working on various committee on the quality aspects on the tax audit quality review board and many other important and relevant committees. Thank you, Pankaj, for being with us.
Thank you, Sanjeev
You
bhai.
had been here for our request and you had been attending this GCC Summit for the first time. What is your thought about this entire GCCs and ecosystem for the country as well as for the profession?
See, I see this is a field. It is said that 21st century will belong to India, and I think the roadmap goes through GCCs.
Nice. I think that's a very positive, very short and crisp. This is a road map for the future of our country and for the future of the profession. Now, since Pankaj is more towards taxation, and I've seen, though I'm not an expert on taxation, that this is one area where a lot of opportunities are available for our fellow members and our chartered accountants, both as a consultant to GCC as well as setting up their own GCC. Now, since he was into the panel, so I had a quick chat with him and I took this opportunity to understand from him two important questions so that even I can learn and all of us together can learn is Advantage Gujarat, Advantage Gift City, and how and what are the various things which we need to learn or know about to understand and take this taxation angle of GCC forward.
Thank you, Sanjeev bhai. It all starts from choosing the correct structure. See, if you opt for a company structure, it is the most preferred structure because any foreign company would like to have full control over the affairs of a subsidiary company. So, normal it is advisable from control perspective to open a subsidiary company, and then subsidiary company models also there are two models, COCO and COPO model. So it is company owned, company operated, company owned, partner operated. When it is company owned, company operated, you have a subsidiary company in India. You need to ensure that there is no permanent establishment, otherwise double tax implications come into force. If it is an independent subsidiary, then also transfer pricing implications are very important. So it is advisable to maintain safe harbor margins between 17 to 20% so that you are saved from litigations, tax litigations, transfer pricings. On the other hand, company owned, partner operated, so control issues as far as structures could be there. But otherwise, in COPO model, there are no transfer pricing implications. As far as a normal tax structure is concerned, see, tax incentives are fading out. We used to have tax holidays 10 years. That is only available, that is a sunset clause. So only old entities
Right.
which are operating in SEZs are enjoying that benefit, and that too with a MAT liability, minimum alternative tax of 18.5% is there. As far as the new GCCs which are opening, if it is a company structure, effective tax rate is 25.17, 22% plus surcharge and cess. But this can be reduced. This can be reduced because there is a very important deduction which is still available, that is 80JJAA,
Wow.
where for any new employment you get a weighted deduction. So 80JJAA is something which earlier people used to believe that it is only for manufacturing, but no, it is also available for service industries. And because manpower is the biggest cost in this entity, you can really have significant tax benefits if you opt for 80JJAA, which comes independently, no MAT, no extra deductions. So it is advisable to use 80JJAA along with a 115BAA 22% tax rate entity. That is the most optimum structure in my mind.
I think with this podcast of just few minutes, we got a very important tax planning and tax guidance from a very young council member, Pankaj Shah. Pankaj, there are so many. We say India is a young country, and we have so many young professionals looking for opportunity, and they are still from those tier two and tier three cities. I'm just going to that general perspective,
Yes.
and we all know that GCC will be more successful if it's happening in tier two and tier three cities. Now, there is a challenge with that mindset of those young professionals, getting themselves adaptable, being collaborative, being cloud-based, being digitally ready, and also, working with these GCC, having that specialized knowledge and domain expertise where they are still into that regular traditional practice, what message you want to give to those young professionals looking to start their own practice, and how they can transition, into this journey from a proprietorship to a partnership to maybe consulting with the GCC and with this entire ecosystem?
To my mind, where there is a will, there is a way. So you need to pour your heart and soul into your dreams, and then from dreams to deeds, it will be a continuous journey.
Nice.
So that is, to my mind, the mool mantra for getting a successful GCC.
I think that requires a 100% commitment, courage, risk, and a belief to say, yes, this is happening. If others can do it, why can't I do it? Or why can't we do it? So I think that's a very powerful message. One last, before we end, a concluding remark from you. How do you see Institute working together with these ministries, and what other roles can Institute take forward as your suggestion, so that we can create a complete GCC ecosystem in this entire country and across the world?
See, this is a very beautiful and important question. Before entering into council and before ICI launched its second GC summit, I was not even aware about what is GCC or what is the full form of GCC. So it is starting of a journey which will go miles and miles. So to my mind, institute can act as a guru which can bring awareness, sow this seed in the minds of our young members so that it can reap and yield good benefits in the future.
And let me tell you, Pankaj Bhai, when we attended, me and Anay Bhai attended one of the GCC Summit organized by one of the IT organization, I don't want to name that, they were not talking about transfer pricing. They were not talking about mergers, valuation, restructuring, ESG. All these areas were not even talked about, which we can play such a significant role
Absolutely.
in this entire shaping these GCCs. And I think we need to develop more and more subject experts to take it forward. So once again, Pankaj Bhai, thank you so much for being with us. We have just learned from him, and he's going to come up with more publications, more literatures related to GCC taxation, because this is one big area, one sunlight area where a lot of professionals can have a great opportunity at. So thank you for being with us.
Indeed, my
and look
pleasure.
forward for more insight.
Thank you. Thank you, Sanjeev Bhai.